Hi guys, I hope you're good and happy new year. Let's quickly have a look at AB InBEV, and I'm on the monthly chart as you can see. And in regards to the monthly chart, we can see that the market over the last couple of years has been moving rather sideways, right, in this manner, right? And I would love to see a breakout rather of sorts, either to the upside or to the downside, right? Nonetheless, the market has been moving rather sideways, as you guys can see, right? Another thing that I can see in regards to the monthly chart is that we have this candlestick over here, right, which is a liquidity candlestick. It is a bearish candlestick with a small body and quite a long lower wick, and what it tells us is that we have a lot of liquidity sitting at that point. And liquidity, as you guys by now know, is money that needs to be triggered by the market at one point or another. We also have another one at this point, right? It's very much similar to that candlestick. We have another one at this point over here, right? So there is plenty of scope for the market to move further down. So as much as I say that we have this block over here, what may actually happen is we might potentially see a breakout to the bottom, because as I said guys, there's a lot of liquidity sitting here, which represents money that needs to be triggered by the market, right? So what else do we see, guys? So as much as I say that there's a lot of money sitting at this point and that the market has been moving rather sideways, I can also see that the market has created what seems to be a W structure, with this side being the first leg of the W structure and this side being the second leg of that W structure, right? And we know by now, guys, that whenever it comes to W structures, right, normally what happens is that a lot of traders and investors buy on that second leg of that W structure and place their stop losses at this point, right? So not only do we have a lot of money trapped below in the form of these liquidity candlesticks, but we have from a trading perspective also a lot of money trapped below here. um, as I said, guys, that a lot of traders actually and investors buy on the second leg of that W structure and place their stop losses below, right? Having said that, remember guys, I said we still have this W structure which has a neckline at this point. In fact, let me just add my neckline. Just bear with me, guys. Let's see, how would I add my neckline? I would do it in this manner. There goes our neckline, more or less, right? And I'm also going to mark that candlestick at the bottom because it is also very much important. This one over here, there's a lot of liquidity sitting at that point. I'll mark this one as well, just these two for now, just so that we don't forget that there's a lot of liquidity sitting at the bottom, right? Yeah, so as I said, guys, or as I was saying, we have this W structure which has a neckline at that point, right? In order for us to start buying, I would love to see price breaking above that neckline and then coming back to that neckline to test it. If it does so, at this neckline is where I would look for potential buying opportunities. And that is because, guys, as I've said previously, that whenever we have W structures, we want to see price breaking to the upside of that neckline, coming back to that neckline to test it, and at that neckline is where we would look for potential buying opportunities, right? We would look for potential buying opportunities. We're not just going to buy, we're going to look for further reasons for why we should be buying at this point, right? But for now, in as far as buying or selling at this point, in as far as the monthly chart goes, I don't see any opportunities, and the market could go in either direction, because as I've said, there is scope for the market also to push further down to this level, right? Anyway, from here I'm just going to head down to the weekly chart. Just bear with me, guys. Here we are on the weekly chart. Let's see. What do we see on the weekly chart? Remember, guys, on the monthly chart we spoke about how we have this huge W structure, right? As much as we have that huge W structure, can you guys also see that we have this triple bottom at this point over here, right? It's just the same as a W structure, and it has a neckline at this point over here, right? And what may possibly happen is, because, guys, remember, just like with W formations, whenever we have triple bottoms, we want to see price breaking to the bottom side of that, or rather to the upside of that neckline, and then coming back to the neckline to test it. And at that neckline is where we would look for potential buying opportunities, right? We would look for potential buying opportunities. We're not just going to buy, we're going to look for potential buying opportunities, which means that we need further reasons and further confluence before making any buying decisions, right? So there goes our neckline at this point over here. The next thing that I'm going to do is to utilize my Fibonacci retracement tool. I just want to see if our neckline actually aligns with any key numbers that we would be, or rather any key numbers that are important in as far as Fibonacci goes. Let's see. So there goes our fib, and guys, we can see that our triple bottom over here, which has a neckline over there, has a neckline that aligns with the, we could say, 50% Fibonacci retracement level. Remember guys, I said should price come back to the neckline, at the neckline is where we would look for potential buying opportunities. So far we've got two reasons as to why we should be looking for potential buying opportunities at this point. Number one, we have the neckline, right, being broken to the upside, right? In fact, we've got three reasons. Number one, let me just clear the board. Let me just delete actually this fib tool. Number one, we have this triple bottom, right? That's reason number one. Number two, we have price breaking to the upside of that neck, or rather to the upside of the neckline of that triple bottom. And number three, we would have in the future, if price does indeed come back to this level from where it is, we would have price, or rather the market, being in alignment with the 50% Fibonacci retracement level, right? So we've got three reasons for why should price come back to this level from where it is, we should be looking for potential buying opportunities, right? Nonetheless, I believe that we still need further reasons for why we should be buying at this point. We would need further reasons, right? Yeah. So anyway, let's proceed, guys. So what else do we see in regards to this chart of AB InBEV, which is the weekly chart? Another thing that I see that is also very much interesting is that we have some spikes at this point, right? And we have a couple of candlesticks that are liquidity candlesticks. Number one, we have this one over here, right? It's a small bullish candlestick, or rather it's a bullish candlestick with a small body and quite a long upper wick, right? And next to it we have a very similar candlestick, right, which also has a lot of liquidity at the top. So what this tells us is that just like that candlestick that I showed you at the bottom, we have a lot of liquidity trapped at the top, this level over here, right? As well as just bear with me guys, as well as at this level over here, right? So as much as we're saying that we would love to see price push further down to perhaps just test the neckline of the triple bottom, we might see the market from where it is actually push further up to grab all of that liquidity. Then only we may see the market perhaps pushing further down, in which case it would give us a very nice M structure, right, which would have a neckline more or less at that point. And should price close below the neckline, just like with double formations, with M formations, right, if price closes below that neckline, we would wait for the market to head back to the neckline to test it, and at that neckline is where we may look for potential selling opportunities, right? And this would be especially for those who are trading and not so much those who are buying and selling shares, right? Those who are buying shares, I believe, should be waiting for the market to reach this point, and then at this point perhaps start looking for potential buying opportunities, right? Anyway, let's proceed. So what else do we see, guys? At this point I don't see much, so I'm just going to head down to the daily chart. And here we are on the daily chart, and just let us recap a bit, right? Remember guys, on the weekly chart we spoke about how we have this huge triple bottom which has a neckline at that point, right? And we also spoke about let me just actually go back to the weekly chart. On the weekly chart, or rather on the monthly chart, we spoke about how we also have this huge W structure, right, which has a neckline at that point, right? Let's go back to the daily chart. So this point over here, this level over here, is now a very strong level of resistance, and that is because we've had multiple rejections at that point. Can you guys see? We've had multiple rejections in the past, right? And currently, and especially over the last couple of weeks or months, we've seen price still rejecting at that point. And what may possibly happen is we might see price push further down. And why do I say so? That is because if we can just zoom in, we can see that the market has created an M structure which has a neckline at that point over there, right? So we have an M structure, and price has not yet broken to the bottom side of that neckline, right? I'm just gonna add a neckline to that M structure as well. I just hope my drawings are not too confusing. The reason why I'm adding all of these drawings is so that we don't forget in terms of what's going on the bigger time frames as we head down to the smaller time frames, right? So just bear with me, guys. I just want to make sure that my neckline is as accurate as can be, and just also remember that necklines are not an actual neckline. They are, or rather, they are not actual necklines. They're not actual lines, rather. They are areas, right? So we could say that this whole area here is the neckline of this M structure, right? I hope that makes sense. Anyway, let's proceed. So the next thing that I'm going to do, guys, in regards to my daily chart is to add my daily channel. Let's see. How would I add my daily channel? Let's see. Just bear with me, guys. Let's see, guys, just bear with me. And just remember that whatever drawings we add to our charts needs to be as accurate as can be. There we go, right? So, guys, let's see. Just bear with me. So we can see that the daily chart of AB InBEV is in a downward sloping trend, right? It's in a downward sloping trend, right? We're in a downward trajectory, as you guys can see. But just remember, guys, that we have all of these W formations at the bottom, or rather in this case a triple bottom, right? And yeah, guys, just to come back to this M structure, remember, guys, we want to see price breaking to the bottom side of that neckline and then heading back up to the neckline to test it. If it does so, at this neckline is where we would be, or rather where we would be looking for potential selling opportunities. And this is more for traders than for those who are looking to buy or sell shares. However, when it comes to those that are looking to, or rather for both traders and those who are looking to buy shares, I believe that the next buying point should be at least this point, because as I said, we have three reasons for why we should be buying at this point. Number one, we have the triple bottom at the bottom. Number two, we have price breaking to the upside of that neckline. And number three, we have the neckline being in alignment with the 50% Fibonacci retracement level, right? To add to that, guys, here's another thing, right? We have a gap over here, right? So what gaps represent is liquidity, right? And as I've said, guys, liquidity represents money that needs to be triggered by the market at one point or another. Can you guys see that, right? So as much as I'm saying that should price get to this level, and that at this level we should be looking for potential buying opportunities, what may actually happen is that the market may push further down to around this level to grab the liquidity that's sitting at this point, and then only perhaps push further up, right? So I'm just showing you some of the possible outcomes that we may experience in as far as AB InBEV is concerned, guys. I hope that makes sense, and let's proceed. So from here, what I'm going to do is head down to the H4 chart. And here we are on the H4 chart. Let's see. What do we see on the H4 chart? What do we see on the H4 chart that we should be paying attention to? Just bear with me, guys. Let's see. So the first thing that I'm going to do, guys, in regards to the H4 chart is to add my H4 channel. So just bear with me. Let's see. How would I add my H4 channel? I would do it in this manner. Channel, right? Okay, I would add my H4 channel more or less in this manner. Just bear with me, guys. I just want to make sure that my channel is as accurate as can be. Right, there we go. That should be fine, right? Yeah, so what do we see, guys, in regards to the H4 chart? Remember, guys, just to recap a bit, on the daily chart we spoke about how we have this M structure over here, which has a neckline at that point, and we said that we would love to see price breaking to the bottom side of the neckline, then heading up to the neckline to test it, and at that neckline is where we would look for potential selling opportunities, and at this point over here is where we should be looking for potential buying opportunities, right? I hope that makes sense, right? So now that we're on the H4 chart, can you see that the information that I spoke about on the daily chart has now expressed itself as a head and shoulders pattern? Can you guys see that, with this side being the first the left shoulder, this being the head, and this being the right shoulder? Can you guys see that the neckline is still over here, right? Nonetheless, M structures, right? M structures are just the same as head and shoulders patterns, or even triple tops. The same rules apply, right? We wait for price to break below the neckline. The necklines are here, right? And for the market to head back to the neckline, and at that point we sell, right? Same concept, same thing applies, right? Yeah, I'm just not a good drawer, but I think you guys get the picture, right? Anyway, let's proceed, guys. Another thing that shows me right now that we are likely to see price pushing further down is that, as I said, guys, we have this triple top, head and shoulders pattern, but on the daily chart it has expressed itself as a M structure, right? To add to that, we also have this channel over here, right? And we can see that price at this point has broken to the bottom side of the channel, right? So should price break to the bottom side of this neckline, we would have confirmation that chances are price would move to this level, right? The first reason is that we have, as I said, guys, this pattern over here, which is a head and shoulders pattern. The second reason is that the trend line has been broken to the bottom side, as you guys can see, right? The third reason would be this pattern, or rather this level. Should price break below that level, chances are the market would move to this level over here, right? And at this level, as I said, guys, for those who are buying shares, I believe that this would be a good point to be buying, as well as for those who are trading, right? But just keep in the back of your mind that we would need further reasons here, right? We would need further reasons here, right? Remember I said that on the bigger time frames we have that, right? We have this head and shoulders pattern. We have the neckline being broken to the upside, which is this level over here, and we have the neckline aligning with the 50% Fibonacci retracement level. So should price come back here at this level, that's why I said we should be looking for further buying opportunities. Having said that, I believe that we need further reasons for why we should be buying at this point, right? So look for further reasons, and yeah, this is a good place to buy, but we need further reasons. Nonetheless, just also keep in mind that I spoke about this area over here, which is a gap, and I said to you guys that gaps represent liquidity, and liquidity rather is money that needs to be triggered by the market at one point or another, right? So price may come to this point and actually disregard this level, which is now a very strong level of support, and the neckline of the triple bottom rather, and then push further down to this level to fill that gap, and then only perhaps push further up, right? So that is it as far as my analysis goes, everybody. I just hope it makes sense, and remember to subscribe to the channel if you like the content. Otherwise, peace out, guys.